Hello, today is December 13th, 2014. Let's review my last call. At the close of trade on Thursday, I said we should have lower prices Friday, and that worked. We had some failed targets from more than 1 month ago. We had a mejt target of 2021.29 that provided a good support resistance level during the day, even though it was more than 1 month old. We also had an ultimate target of 2007.33. Ultimately, ultimate targets print, and that did print. That's significant because we have a higher ultimate target from Friday's trade of 2028.54 and a standard mejt target of slightly less than that. During the day, the system said ultimately lower and higher prices would print. We got the lower one. Here's the higher targets we mentioned. It also said this rally in the afternoon was a false move, that this price would be hit, and that a move with staying power would begin after this time. For the short term, we have a number of signs of capitulation by the emitters. With less than 1/2 hour left to trade, we had a gap down, new lows, and an inability to cross under these lows. In the last half hour, the only people who will be selling with abandon into a wall of selling are the emitters, because professionals aren't going to make huge sell orders when there is not enough liquidity on the other side of the trade. So we have a wall into the close. We have a close at the absolute low of the day, which shows the emitters aren't booking any profits. They anticipate it will continue. We have lower lows even into the close. The only one who will be selling like this is the emitters. The ones forced to take the other side of the trade are the market makers. Usually they get their money returned pretty quickly. The common scenario here is we have a gap up, a strong one, and rally throughout the day, hopefully hitting our 2028 plus target. If there isn't a gap up at Monday's open, I'd be suspicious the call would not work. Note that the close was at a Fibonacci target of this consolidation, and of this consolidation also. So we have a straight line drop to support, but not through it. Unless we have a gap under it, that usually holds. So for the short term, things look pretty good. Long term, not so good. We have a target from the Andrews pitchfork of 1977. I think we could go lower than that. I started discussing the whole 5+ year market rally being over here at 1985.59. We've rallied about 5% past that price, but even though we made quite a few new highs, we haven't been able to hold on to any of them. If this is an Eve and Adam top, we should have a straight line move down to 1820.66, and once we go over that price, under that price, that's a major top from which it could take years to recover. I think it's worth pointing out that we are now declining in 1, 2, 3, 4, 5 waves, rallying in 3, and then declining in 1, 2, 3, 4, 5 waves again. That's not the way things are supposed to happen in a market going up. It's really a sign of an impulsive move lower. So the call for Monday is that the open is critical. The bears need a gap lower at the open. I don't think that will happen. I think the most likely scenario, but not a complete lock, is that we have a gap up strongly. If that doesn't happen, I'd be suspicious the rest of the prediction wouldn't work out. But if we have a strong gap up at the open, I'm looking for 20, 28 and change, and that's today's call.